Japan's SoftBank Group is back in the black. The investment giant has reported a bumper $7.7 billion in quarterly profit, powered by its global bets in startups, including startups in India. The recent IPO frenzy in India has added to its fortunes. For instance, a $400 million investment in First Cry is now worth $1.2 billion. Similarly, it's $600 million in Ola Electric, now worth over $1 billion. And more recently, Swiggy has delivered a premium on listing day. Interestingly, Swiggy was SoftBank's first bet in the Indian food delivery space when it invested $450 million in 2021. Today, that is worth nearly $1 billion. That's not all. SoftBank is also betting big on Off Business, which is also planning $1 billion IPO. Joining me now to discuss SoftBank's India bets and the road ahead is the investment fund's managing partner for India, Juneja. Many thanks for joining us. Just a few minutes ago, you were at the NSE with Harsha listing Swiggy. What a day it's turned out to be. But let's talk a little bit about the journey to the IPO and to listing day itself. The last few days looked quite difficult, didn't they?
Oh, Shereen, thank you for having me. Indeed, I think we're now taking all a sigh of relief that the stock is up, 10 to 12%. But it's not been easy. From the time we went on the road, Zomato, which is the closest comp, I think was down about 8 odd percent. The market was down 5.5%. There was the US election, there was China stimulus, so a lot outside our control. And I think what we did well was we priced it right, where we knew we had enough book and we had a high quality book, a good balance between domestics and foreign, breadth and depth, and people who really understood the story and not who were looking to flip on day one, but also just to long-term holders. And I think the proof of the pudding came actually in the anchor book. And once the anchor book got oversubscribed by high quality names, we knew we were prepared for a jittery market. I think, did I expect it to open positive? I think that's even better. But I think we had played it right to make sure that we left enough money on the table.
That decision to leave enough money on the table, and I think this has been one of the big lessons as far as the recent IPOs are concerned, getting the price right. I mean, we've seen the debacle of something like Paytm, for instance, and you were investors there as well. That decision to get the price right, to put enough on the table, how hard is that conversation with founders? How hard was that conversation with Harsha?
So I think, like you said, I think when you've seen stocks not do well in the past, then the conversation becomes easier. I think if Harsha was the first tech IPO going public, maybe it would have been harder, but Harsha is an exceptionally long-term thinker. He's made money for investors all throughout. So I think with Harsha, it would have been easier. But generally with entrepreneurs, I think it's been easier because now it's quite clear. You are stopping your journey with private investors. You're starting your journey with public investors. And if you don't have their confidence, then that's going to play out, in different ways over the next 10 years. Their confidence will be less. They will give you less room for error. And so now the formula is quite fixed. Let's leave some money on the table. Even if you get diluted a little bit more upfront, I think over the 5-year period, we'll all be much happier.
Well, let's talk about Swiggy and your confidence in the bet that you've decided to make, and you didn't participate in the OFS. Is that on account of the fact that you believe that there's significant headroom for growth from here on?
I think there is. I think, look, there is very few times in a country and in an investing professional's career are you going to see such a large platform being created, right? When you have both food delivery and Instamart, when you have $5 billion plus of GMV, when you're touching 100 million plus consumers, when the repeat of orders is that high, and India is only becoming richer, more urbanized, and the product market fit becoming only stronger, we think Swiggy has a long way to go. Obviously, execution is important. There is competition, Zomato, Zepto, but I think the market is large enough. The product market fit is very strong. And that's why we didn't do any OFS, because we think there's a long way to go for Swiggy.
And you're holding 8% off it, so that's a sizable chunk. But let's talk about the competitive landscape. Of course, you talked about Zomato, and of course Zomato with Blinkit. The quick commerce wars. I mean, forget food delivery. Let's talk about the quick commerce wars, and you brought up Zepto as well. Significant amount of cash that Adit and team have been able to raise recently. How does the competitive landscape stack up, and do you believe that we're heading back into the era of more burn?
So, we've seen this story before, right? We saw it in e-commerce, we saw it in food delivery. When there is a strong product market fit, when the TAM is big, competitors will come. And honestly, yes, it might be initially some burn, but I do think that competitive dynamics then brings out the best in everyone, right? Do I think Swiggy and Zomato are better companies today because it was competitive? I think they are. And eventually they had to win it and get the unit economics right.
Did you see the tweet that Zomato tweeted this morning with a heart for Swiggy?
Yes, no, for sure. And
is that love for real?
No, I think that love's for real. And I think if you go back, and that's a separate question, but if you go back from 2014-15 onwards, I think Dipinder and Harsha have had a great dynamic. They've been competitive, but they've also, both of them have created a massive market, a lot of employment. And really for you and me as urban consumers or even rural consumers, it's been a real joy to have them as apps on our phones. On the grocery market, I think that TAM is exceptionally big. I think the question often gets asked, oh, it's not worked anywhere else in the world, why will it work in India? We don't have modern retail. We don't have the convenience retail. We don't have 7-Eleven. Urban infrastructure is not ideal for you to go out and pick up stuff on your way back from work. You put those dynamics together, you also have a much lower delivery cost vis-a-vis what you can charge the customer. And if you put those dynamics together, I think it just becomes a very, very strong proposition.
But, is there room for more than three? I mean, we currently have Zomato, Blinkit, Swiggy, Instamart and Zepto. But now everybody else seems to want to get into the game. Big Basket's trying to do 10-minute deliveries as well. The big boys haven't quite gotten into the game yet, but pilots are on. I mean, is there room for more than three?
So my view always is, theoretically, the TAM is big enough. We're playing the grocery market, which is probably 5 to 10x the size of the food delivery market. So can there be more players? Yes. But we've seen this across, I think, any industry, whether it be broadband, whether it be telecom, whether it be e-commerce. Players will come and go. I'm sure more and more players will come, but it takes a lot of capital and it takes an immense amount of execution, both on the ground and very, very good high-quality tech teams. So I would say a lot of people might enter, but very quickly there'll be only a couple who will actually be able to take advantage.
But on the execution challenge, and that really will boil down to who succeeds in this market. And we've seen some fabulous stuff being done by everybody in the game, whether it's Blinkit or Swiggy and Zepto as well. What do you foresee as the big execution risks as we build scale?
The big execution risk, I think, for me, is twofold. One is you just have to get the consumers to order more and more. You will, at certain points, start capping out with your prime urban consumers. So you have to convince other people who are not, double income, working, to also use the platform. You will have to go beyond tier 1 cities like food delivery has. And most importantly, you'll have to get the FMCG companies to play ball with you and get some margin from that business.
The regulatory risk, and we've seen the government sort of talk about the fact that quick commerce needs to get its act together in terms of playing fair. We need to create a level playing field. There's also been issues with other regulators, the Consumer Protection Authority, for instance. The regulatory risk, how real is that? How much of that are you factoring in?
No, I think, look, in any and this is across the world. This is not a question for India. Any market which rapidly grows, the regulation and the market speed are not always in sync. Our view is that if you are playing fair, if the regulation is not helping one particular company and it's equal for all, there will be a meeting of minds between the product market fit and the company and the regulator. We saw this in cabs, we saw this in food delivery, we saw this in e-commerce, and I'm sure there will be a level playing field or understanding between the regulator and the companies of what the right regulations and what their right barriers are.
So you're not overtly perturbed about?
I'm not.
No?
I'm not. I think all of them are playing with the same sets of rules. I think this government is very pro startup India. I think there are a lot of employment being generated. They have to play by the rules, and I think between the government and the companies, they'll find a happy medium.
One of the other aspects of this quick commerce story and the way that it's playing out in India is that it has changed consumer expectation on gratification and fulfillment. How much of disruption do you believe that is going to cause, not just for quick commerce companies or companies that are competing in that space, but overall as consumer expectations change?
I think consumer expectations are changing so rapidly, and I think we're just going to get spoiled further and further because technology is going to make it easier for us to get everything a snap of a finger. I don't want to watch TV anymore because I don't want to see adverts. I only want to watch it on demand. It used to be 10 minutes, maybe 15 minutes. You know, e-commerce used to be 1-day delivery. Why should I wait for that? You know, I want it in 4 hours. So I just think we're going to get more and more spoiled. And I actually think that's really, really exciting, because it's a challenge for Swiggy, Zomato, Blinkit, Zepto. And us as consumers will just, you know, get it better and better.
Let's talk about some of your other bets, and let's talk about Ola Electric in specific, and the tweet storm that has led to both wealth destruction. I mean, do you have a point of view on that?
Look, it's a public company, you know, so I'm not going to...
In which you're investing?
No, we are invested. Look, like I said, I think these entrepreneurs have finished their journey of dealing with private investors. They're starting their journey to deal with public investors. I think the public investors are a different dynamic, different DNA. There is liquid, they don't like it, they can sell the stock immediately. And so I think the entrepreneurs will have to learn that, you know, they need to be a little more maybe balanced in their approach, a bit more cautious of the way they communicate with the market.
But speaking of the electric story and the EV story in India, you know, world over, we're sort of seeing a pullback as far as electric mobility is concerned. In India, it's a different story because we're still at a fairly nascent stage. What's the outlook on growth in an era where we're likely to see less and less subsidies being put on the table by the government?
No, I think the motion is not there. I think you know, we can all take our view. Our view is that, you know, over the 5-10 year period, can we be reaching, you know, 40-odd% penetration in EV? I think we should be. It is a large two-wheeler market. It is more economical in the long run for a consumer to have EV. We're making it at affordable prices. The government is kind of is behind the mission, because it's obviously very good for the environment. And so if you take that, now the question comes at who is going to be the leader. And I think for Bhavesh, like you said, you know, there might be some you know, up and down in the stock, but what he has created is just absolutely unbelievable. Right? To come out of nowhere and say, look, I'm going to start the first EV revolution in India, take on the incumbents, build a bike which is reliable. And I think that's fantastic. So now the bet is what kind of market share Ola Electric will have, and we are, you know, very confident that, you know, he'll do a great job.
And you're committed to the investment in Ola?
Yes. So Ola Electric.
Yes.
So just to be clear, you know, obviously we are locked in for 6 months. We did very little OFS in Ola Electric. We did hardly in Swiggy. In First Cry we came down because we were a very large shareholder. All three companies we think have a long-term, you know, a view and a long-term growth story, but we have to make money as well, right? we have LPs, we have SoftBank Group, you know, who have invested in the SoftBank Vision Fund. So at the right time, we will pare down our positions. We can't hold them all forever.
So once the lock-in is over, you're looking at a partial exit, or?
Depends on the market, depends on the performance of the company, but it's definitely going to be a very thoughtful, gradual exit.
Okay.
We are in no hurry to exit.
Okay, that's as far as Ola Electric is concerned, and those are the few portfolio companies that have already listed. Let's talk about the IPO pipeline. And given the turn in the markets, do you believe that we're likely to see a bit of a pause there, or do you believe that the momentum continues?
I think it depends on the quality of the company and how much you want to raise. I think if you have a path to profitability, if you are profitable, if you're a market leader, very high unit economics, I think you can list. Like I said, it's you leave more on the table, the market will accept you. Is there enough liquidity in the market today? Yes. Is there enough depth in the market? Yes. You know all the SIP numbers, you know how much money is flowing into the Indian markets. I think the question arises, if you are a company on the fringes and you need the investors to believe a DCF 15 years out, then I think it starts becoming tricky. But if you're a Swiggy, if you're a Ola Electric, if you're a First Cry, if you're a high quality company, sure, it might go at a lower price, but you'll go out.
Has the engagement and the perception of dealing with public market investors changed? Especially, you know, with you had that first cohort of Zomato, Paytm, etc. Now you've got the Ola Electrics and Swiggys of the world. And as you build out this IPO pipeline, has the engagement and the perception of dealing with public markets changed with these new age companies?
100%. So I think there are 4 or 5 very big learnings. One, we have to start engaging with investors a lot earlier than just waking up 6 months before the IPO and saying, look, this is what my company does. And that just makes the rapport. They see our story, they understand us better, so they're not starting from scratch. Because to go on a roadshow for 1 hour and make a decision is not going to happen. Second, as you know, the domestic investors are becoming more important. They are long-term, they are India, they're more sticky, so we got to convince them. Convincing them are not easy. They ask good questions, they ask tough questions, and that's why we need to kind of engage with them a lot. On the positive side, they have now made money in tech in India. So if you look at all the tech IPOs, whether it be Zomato, Nykaa, FirstCry, etc., people have made a decent return. Policy Bazaar, another one of our companies. And so there is this positive inclination that yes, tech in India is going to be a large part of the market cap. They understand it better. And I think so it's actually becoming a happy medium where we know how to respect the public markets, and the public markets now appreciate that there is real returns to be made here. And again, at the right price, the deal will happen. At
the right price, the deal will happen. But let's talk about overall what the view is on India. Is Masayoshi Son in defense mode still, or are you willing to now start writing
we are willing. Look, I think Masa's been talking about AI way before anyone else. Yeah. You've seen the SoftBank results. You've seen the success we've had in India. You've seen the success of the Vision Fund in the results recently. And so I think as a firm, we definitely want to take more AI and more tech bets. Right now, AI is a broad term. It can be an AI infrastructure. It can be in AI-first companies. It can be how companies are using AI to either reduce costs or increase the quality of their product. But if you take that umbrella, tech-first, AI-first company, I think that we are super excited to do.
And what does that picture look like in India specifically? I mean, large bets, OpenAI, Perplexity, those are some of the large SoftBank bets being made in the AI space globally. But what about India?
So India, if you look at, is there going to be a language model coming out of here? Maybe. We haven't seen that yet. But they are.
So take on Krutrim.
No, it's a good company. I think it's early days, but it's a high quality company, and we'll see how it evolves. Too early for us right now, but we'll see how it evolves. But there are going to be a lot of AI-first companies, whether it be video editing, video creation. We're seeing a lot of that today, and that we're looking at quite seriously. And then you fast forward to say, okay, how does Swiggy reduce its costs? It reduces call center costs by using AI, right? How does Lenskart manage to deliver prescription glasses the next day? Because the factory is fully automated, robotic, which is machine learning and AI. So we look for spheres like that, and how do we, through robotics or AI, those companies definitely exist in India. Because remember, in India, you might not need AI because labor is expensive, labor might be cheaper, but you need AI because the volume is humongous, right? If you see the amount of...
It's not just a labor arbitrage thing.
No, I just think it's a volume. So I don't think you can deliver the volume Meesho delivers or the volume delivery delivers or what Swiggy delivers without automation and AI. I don't think the humans be able to do.
So what is going to be the check size that you're willing to write at this point in time?
Our sweet spot has always been, at least a $50 million check size. If you see, and it's not only SoftBank, if you see our peers as well, growth tech investing in India has been slow. We came off the 22 cycle. I think these exits are helping. So we're back in the business. We are looking at deals. We might have to reduce our check size a little bit because we're seeing companies earlier. Also, now, after the 22 cycle, companies have suddenly become super capital conscious. So they might not want to raise 100 million. Because they're like, now we know how to build a more capital efficient business, so we can do the same with 50. And we don't want to be out of the game. So I'm not going to have just a number for the sake of it. If the company wants to raise 30 and we like it and they're more capital efficient, we'll do it.
But let's talk about some of your other legacy investments, Oyo in particular. Turning a corner or starting to turn a corner, but IPO plans on hold twice over, an attempt to go to the markets and then pull back. Also the level of debt, does that worry you and the international expansion plans?
No, so I think, the IPO, we withdrew the DRHP, that was just once. They've done a phenomenal job in turning the business. It's highly profitable at the moment. The business is pan-India, it's all over the world. There's India, there's Europe, and there's the US. I think they've got the unit economics right now. And I think they've seen success in different markets. The US will be a focus for them. Europe is there and India. So if you put those three markets together in their niches, could Oyo build a pretty healthy EBITDA positive business, which they are on track for? I think so.
And global expansion driving EBITDA?
Global expansion driving EBITDA as well as India driving EBITDA. So I think the mix will kind of depend on obviously how the three geographies do, but I think it'll be a good combination of playing a global, in that segment of the hotel and tourism sector.
But on board with the international expansion plans, do you?
Yeah, I think what they've done in Europe was very impressive. They did an acquisition. They took the synergies out, which has become very profitable. And so I think, as SoftBank and as a board, we think that if they find the right opportunity elsewhere, at the right price, obviously, they should be able to do it.
So what's the next cohort that you're hoping to harvest from?
Yeah, we're waiting. So look, I think we come in, say Series D, Series E. For us, that was the 2021 seed Series A, Series B cohort. Just like 21 was expensive for growth, it's probably expensive for seed Series A. So maybe that cohort was not as high quality as the cohort 5 years ago. But there are companies coming out. And I think what's heartening now is the companies coming out with more experience and more capital efficiency. And so that's why maybe it's harder to do deals because they don't want to raise as much capital. But I think Zepto is a prime example, right? We are in Swiggy, but if you were not there, it's
you would have bet on Zepto?
I have my views, okay, but I think that's a company which is.
Is that a yes or a no?
Let me enjoy my Swiggy moment. No, so I think, look, I have my views. I do think if you specifically on Zepto and if you bet on it, I do think it works well when you're part of one platform. And I think the synergy between Instamart and food delivery is very, very strong. So if you just do it independently, I think there's a lot more work and you have to believe a lot more for the unit economics to work. But the next cohort there are some AI first companies coming. There are a lot of omni-channel companies coming where we've been very successful, like FirstCry and Lenskart. And there are new age e-commerce-ish companies coming, which seem exciting because I think the demand from the consumer one day is becoming too late.
One day is becoming too late.
So now let's see what the models evolve to make the consumer, the same day delivery model.
But these same day delivery models, the 10-minute delivery model, and it's working at least as far as some of the companies that we just spoke of for now. But we're also now living in a fairly inflationary environment, not just globally, but also here in India. The ability for the consumer to continue to pay, how do you see that?
I think it's convenience. I think, look, there's my view is as we become wealthier as a society, I think time becomes more precious. You do end up spending a lot more time at work. You do maybe end up spending a lot more time to do recreation stuff. If you see globally, as you become wealthier and the GDP per capita increases, time becomes precious. And would you pay for that time? So even if you take you and me or anyone as an example, right? Maybe 5 years ago, 6 years ago, you say, I don't want to pay the 40 rupees, 30 rupees convenience fee. But today, if I'm watching my Netflix show, I would pay the 30 rupee convenience fee because time is critical. And I think, yes, there's inflation, but you are becoming wealthier, time is becoming more precious, and you will pay for convenience.
So, if you were to look at what's happening in the Indian startup ecosystem at this point, and I forget how many unicorns we've minted and so on and so forth, but just the depth and breadth of the kind of opportunities that people are looking at, as well as the robustness of the business models themselves. How different is the story today versus, say, maybe even 5 years ago?
Oh, no, tremendously different. I think 4 or 5 big things. Number one, India will never have tech IPOs. 5 years ago, if you in 2018, India will never have tech IPOs. India, negative net income companies or PAT companies can never go public. That's out of the window.
Yeah.
They've gone, we've done well, and we've had ups and downs, but the big exits to happen. India will never have a $10 billion plus tech company in India. Now you've got many who have gone. I need a VP of engineering. I need a VP of product. Let me convince someone in Indian diaspora in the valley to come back. Not anymore. You've got people coming out of the larger companies like Flipkart, Zomato, Swiggy, etc. So if you look at any of the next phase of unicorns or next phase of high quality companies, that tech team has come from previous unicorns, right? 5, we've gone through, and us investors as well, we were also, it's a young ecosystem. We've seen cycles. When you burn $50, $60 million a month, it doesn't go anywhere. So you've become more disciplined. The founders have become more disciplined. The founders want to own 15, 20, 30% of the companies. They don't want to own 4, 5% and dilute themselves all the way. So it's becoming more capital efficient. If they're more capital efficient, founders will make more money, investors will make more money, and the business model will be a lot better.
Those are some of the big changes and the big shifts that we've seen specifically as far as India is concerned. But let's end by talking about what's happening globally. I mean, we've got this big Trump trade playing out just about from Bitcoin to the equity markets, everything rallying at this point in time. And tech specifically, Elon Musk, a large role that he's likely to play in the scheme of things. I mean, how are you looking at all of this?
I think whether it's the Trump trade, I think markets need an excuse to ride up or ride down, right? So I think this is temporary, but I think fundamentally the capex on AI by the large players, the companies like we invested in OpenAI, Perplexity, Poolside, I mean, that notion has been now going on for last 2 years or so. Now, it's always like you over-exaggerate the short term, but you
underestimate the long term.
Underestimate the long term. So the valuation will keep moving around, but is this massive wave where fundamentally it's going to be the way you change the way you work, the way your efficiency works, the way products work. And so that wave is definitely coming very, very strong. So I am, and maybe I'm SoftBank and biased, my boss is very AI focused, but I think we are very, very excited in what lies in the future.
Well, speaking of the future, the immediate future, 2025, Indian IPOs, the pipeline, on the back of whatever visibility you currently have, and of course markets will do what they do, but what bigger than 24? What's the outlook?
Look, you say that. If you asked me 3 weeks ago, I would have said bigger than 2024. It's suddenly changed in 3 weeks. But I think there is a time which has now come when there is a cohort of and in the tech space, a cohort of very mature, well-built tech companies which will go public in 25. So I would say it'll probably match 24 because there are 6 to 7 very high-quality names which I can think of, which will definitely go public in 25.
Well, and of course, a lot will depend on the markets and how they play out, and of course, the price that you are willing to put on the table. But Sumaira, it's always a pleasure. Appreciate you joining us here on this edition of Young Turks, and we look forward to seeing you back again in India.
Perfect. Thank you very much.
Thanks very much. With that, it is time for us to wrap up this edition of Young Turks. From all of us here on the team, for now, goodbye. Many thanks for watching. More news coming up right after this.